Happy weekend, everyone. I hope you're all doing amazingly well and relaxing after a fruitful trading week. John Henry here, SSFTG. Welcome to This Week in Review in the U.S. markets. In this, we take some time out and look at the technical overview of the markets and what to expect as we move into the next week. If this is your first time on the channel, welcome, my friend. I hope to earn your like and subscription today. First off, we have to take a look at the news calendar to know what to expect for this week ahead. News generally does have the largest impacts on the market, and the first thing that we can see is, well, February 14th, that is Valentine's Day, of course, a big one to not forget about. But there's no news. There's nothing happening on February the 14th at all. The only thing that they have is at 11:30, and that's Fed closed board meeting. So as far as Monday is concerned, it is a very, very quiet week on the news calendar. Jumping over to the 15th, we've got still not a whole lot going on. We've got some early morning news at 8:30. Some of our typical stuff, the US PPI and core PPI numbers, New York Fed manufacturing numbers. Nothing really that big going on the 15th. Of course, it is Tuesday, and although Monday is a holiday, that doesn't seem to be pushing anything off, at least not yet, because Monday will still be open as far as a trading day is concerned, and that means that API reports will be coming out on Tuesday as expected. API reports at least give us a heads up in terms of what to expect for crude oil inventories that come out on Wednesday, and that will be the following day on the 16th. But as far as the news for the 15th is concerned, it is very calm and quiet once again. And just like the calm before the storm, we roll into the February 16th, where all of the news rears its ugly head. We roll into the first one at 8:30. The U.S. retail sales month-over-month forecast is 2%. The previous was negative 1.9%. At 9:15, U.S. industrial production month-over-month forecast is 0.4%. Previous was negative 0.1%. At 10:30, we have the U.S. crude oil inventory numbers. It's actually not showing a forecasted number, but either way, the API, regardless of what the forecast is for the Wednesday inventories, API will give us a better heads up anyway. So more interest on the Tuesday numbers regardless. And then a big one to keep things going all the way into the afternoon session at 1400 Eastern, the FOMC meeting minutes. And usually when there's meeting minutes, we also have those announcements at 14:30, a little bit after, with everything kind of balancing out and speakers and all of that. So as far as news, it might have been a calm first couple days, but rolling into Wednesday, it starts getting pretty busy. On the 17th, we've got some early morning news at 8:30 with the U.S. housing start numbers forecasted 1.7 million. U.S. initial jobless claims also forecasted 219.5. That's really all we have for Thursday. Everything kind of calms down, quiets down after that. There aren't any really big names or anything that I at least pay attention to reporting. So a relatively calm day on the 17th. Some early morning news, but maybe an early in, early out kind of mentality. And then finally, we roll into the end of the week on February the 18th with 10 o'clock U.S. existing home sales. Forecast for that 6.1 million. The previous was 6.18. And that's really all the news that we have for the week. Kind of a calm week as far as large news announcement goes, but you know, from a global perspective, there's a lot of other things going on that I think people are more worried about. First up on the list as far as the charts are concerned, we jump into the Nasdaq. And the Nasdaq has had some... along with the rest of the index markets and, well, the rest of the markets, has had quite a bit of volatility stepping up to the plate. Jeez, oh Pete, this thing has just been getting slapped all over the place. Realistically, we haven't made any new major highs. And after failing to make a new major high into that beautiful resistance zone at 14,972, it dropped all the way down into the major support zone at 14,215.75 to 14,090. Never did make it up to that resistance zone a little bit above the swings, but it seems like the sellers were just a bit too strong. Looking at this in terms of news structure, maybe there's a little bit of a channel going on, but as far as the previous zones, they only have to be modified a little bit. Crude oil did incredibly well, considering that, well, only one zone came into play. That was at 89.26. Incredible amount of support there. I mean, it could barely even work its way through before going absolutely ham through the ceiling. And now we're back up to the high that they just put in at 94.66. Huge amounts of bullish momentum. We've got a ton of OPEC news going on. We've got possible war stuff going on, which is going to have pretty steep ramifications on the oil industry. There's all of this different stuff geopolitically going on outside of just crude oil in and of its own economy, that this thing is getting pushed all over the place. And it's not likely going to get better anytime soon. In fact, the bulls have had very little pullback to work with at all. And if they're given any kind of pullback of substance, they're likely going to be all over it. The first zone of interest is going to be just back underneath 90s in the 89.26s, then down a bit further, 87.41, before we hit the big zone of support from 85.57 to 84.64. As far as resistance above, there isn't much. We're just back at fresh highs. There's not a whole lot to work with when we're dealing with this kind of momentum to the upside for resistance. We've got to kind of treat it as though it's brand new and just kind of go from there. And after a few tweaks and modifications, which really is just 3 lines, it's 3 trend lines, and 2 of them are from a channel, we can see that there is one incredibly obvious point of interest that stands out on the Nasdaq. First off, as far as rising support goes, we've got this beautiful rising support, nice and solid, and the market's finally been able to retest back down into that zone. We've already been kind of contemplating this area to begin with. We talked about this zone last week at 14,200s. But as far as a zone of rising support, it is hitting it perfectly. Now, what else is interesting here is that if we take the highs and draw it down, we've got our descending channel. We copy paste that line to the bottom end, and lo and behold, that lines up in the exact same spot. So now we have a channel low, we have a rising wedge low, and we have a structural algo hot pocket all coming in the exact same spot, right around 14,200. Now, just like every other reversal, you don't generally see it do this. Sometimes you do get that V bottom and you can get lucky and bag some really nice entries down here. But chances are you're going to get more something along the lines of this. It's not going to be an immediate reversal. So even though we are in a zone of support, it might be a lot safer to wait for a couple sideways transitional phases first before getting the follow through. One thing is for sure, the bulls are still in their major zone of support at 14,215 down to 14,090, especially now that we've lost the 15,000s once again. And as far as the sell side goes, if the market were to miraculously jump all the way back up to the 15,311s, JP and the crew and all the other algos and their millions of zeros in their bank accounts are going to be looking to swat down all of those stops and slap that bag right back down to the floor. The S&P followed through almost exactly like the rest of the index markets, and it lined up beautifully with what we were looking to do. The resistance zone off of the 45.83 quarter, all the way up to the 46.2175s, although that was not necessary at all. Phenomenal rejection, all the way back down to the first target zone and the area of support at 43.94 half. It only went through it by a tick or two. Unbelievable rotation here. Now we do have to modify a few things here to get it up to date for the week ahead. And after a quick few updates here on the S&P, we can see that we have a couple nice little zones laid out ahead of us. We do have the rising support just like we had on the Nasdaq, but the Nasdaq, well, they held on that side of support, and the S&P, well, they're having a little bit of a challenge. Not to say that it's failed. It's certainly hard to say that it's failed, but it does not look as nice as the Nasdaq did. We do also have the fact that support on the S&P is a little bit further down, 43.34 down to 43.03 half. And that kind of begs the question of, is this actually done falling, or do they have a bit more work to do? From the way that this looks, personally at least, I believe that it has a bit more downward momentum to do to finish off some earlier objectives and even possibly just get earlier stuck bears from back on the 24th through the 28th out. Give them a chance to get out as well. And that really doesn't start happening until a little bit lower down in the 43, at least the low 40s, otherwise 43.34 down to 43.03. There's too many 4s and 3s in here. That's going to be the zone of support. So As far as a resistance is concerned for the sell side, we've got 44.67.5. Then that rolls up to the top of the channel where it becomes much more interesting at the 45.28 quarters to 45.41.5. That same sell zone from last week is still there. That hasn't changed, and it's likely that sellers will defend there if it does make its way back up. But for the most part, I would really rather see more of an inside wedge play continuation to the downside to finish off the bullish objective and get the bears involved all in one move. The Dow is another one that gave us a picture-perfect rejection. Phenomenal drop off of the top area of resistance, 35.471, up to 35.710. And it did have to use all of it, but that ended up rotating down very, very nicely. And now with this rotation down, this has done two things. Not only did we get a new high, but that also gives us a new low. And we've got a bit of a megaphone now because of this. The same earlier zone of resistance is still going to be there. And in fact, the same zones of support all the way down are still there. Those haven't changed either, other than maybe a slight modification higher on the support side. But as far as the overall structure is concerned, we've got a very wide and even expanding type sideways range in a megaphone that we are more near the lows of. Even though we're not necessarily at support, structurally speaking, this makes more sense that the bulls try coming in. What I would like to see is a little bit of an overflush through the bottom of that megaphone to allow the bulls to buy into the dip down here at the 34.300s, even as low as 33, the upper 800s there. So after modifying it just a little bit with the megaphone, we can see that one of the most opportune areas would be a slight little overflush down into that low, and then look for it to rotate right back up as far as the megaphone pattern is concerned. Very interesting seeing the Dow deviate away from the other markets, the other index markets, by quite a bit. Over on gold, we have an incredible rally to the upside. All of the zones of resistance that I was looking for effectively shut down. What's interesting, though, is that all of those zones of resistance, although they did try very nicely, out of the 1839.1s to 34.4s, they didn't quite make it far enough. It just looks like the earlier sellers who were trying to sell those 1824.4s, they obviously realized they got stuck in the move, and when the market came back, it allowed them to get out at break even, and it looks like they took it pretty aggressively. Very, very strong rotation to the upside, both suggesting that there aren't stuck shorts, which is good to know, but also that there are very happy and very bullish longs that are finally getting some momentum to move. We've been in this sideways range forever. This is a very nice change of pace. And after a bit of updating here, we can see that the market is incredibly bullish, but possibly at the top of some channels support. Well, in this case, it would be resistance. We've got some issues up here. Every time gold runs up to the upper third or quarter or so of this, it tends to get very push-backy. The bulls lose their ground up here. Now, it's not to say that the bulls are going to lose their ground and tumble all the way back down to the lows. And in fact, the way that this is rotating with all of these big wicks back would suggest that the bears have gotten out and the bulls have completely taken over control. The issue is more that it's just too far up for the bulls to want to hold here. It makes more sense to eke out some profits and buy on the subsequent dip to reposition. That means that the next zone of interest as far as pullbacks are concerned begin at 1836, then at 1821.8, both on the more aggressive side towards sort of the middle of the range, looking for more of a lightning bolt type continuation to the upside. Then there is the deeper corrective phase down towards the bottom of the channel. That's going to be at 1807.9 to 1801. Phenomenal zone of interest, and pretty much everything on the bull side. It's just got to wait for an actual dip to happen first. And then finally over on Bitcoin, came up into the zone of resistance at 44,433. That's a fun one. And rejected all the way back down to where it is now, 42,217. Not a whole lot of back and forth volatility going on. For the most part, Bitcoin had a really nice launch to the upside, but not really any pullback. And as far as resistance is concerned, the sellers are still demonstrating that they're in control. We are in the beginning phases of what's needed for the bulls to take over for a trend reversal, but we don't have proof yet And we won't have proof until we get another new high. We're going to have to modify this a little bit to get it a bit more up to date, but as far as the resistance is concerned, that side isn't going to change a whole lot. The 44,433 half area is going to be a big spot, along with 46,947 up to 48,184. That whole area on the downside, sellers are still going to be looking there, so that's not going to change much. Now remember, if you aren't sure what's going on here or how we're finding these major turning points in the market, check out the Day Trading Academy. It's loaded with almost 20 hours of video course material, so you know exactly how to approach the markets and why they're doing what they're doing. We also build a game plan with YouTube members every single morning from 9 a.m. Ahead of the New York Stock Exchange Open until about 9:25 or so. So make sure to click the join button below the video for more info. Finally, we land on Bitcoin, and Bitcoin, after being updated a little bit here, we've got some good overall momentum to the downside, but, well, to be fair, the bears are still in control, and the bulls are really only calmly rallying back up. There's not a whole lot going on here as far as the bulls are concerned, and if anything, we may even have a possible false break above the channel, which is not good at all for bullish health. In fact, more often than not, that means inside retest and possible drive down. That means that the resistance areas at 44,433 half still stand, all of those like we were talking about, but as far as the support areas are concerned, those have modified a little bit here. The first support zone stepping up in the 41,000s, almost exact. Then we go down to 38,714, 37,079, and 35,814. Lots of zones of support on the way down, but the big thing that we need to see is how they want to respond to this overshoot in the highs of the channel. If they want to equalize the low, it makes a lot more sense that we see those bulls step up in the 38.7s instead of the upper band in the 41s. All right, folks, that's going to do it for me. If you're looking for a way to hang out with me and the rest of the VIP crew during our live trade room, you can register for a 1-week trial on the main page of SSFTG. We run our live trade room from 9 in the morning until around 11:30 or so, depending on what the markets are doing. Along with that, when you register, you also get our 24-page guide on risk reward for free, which is a really nice little perk added bonus there. I hope you have an amazing week ahead, and of course, like we always say, stick to those plans and stay safe out there, my friends. Until the next one, thanks for watching, and we'll see y'all then. Bye.